Hey guys, Alex here with Prime Real Estate Experts. This is the market update for February. Again, this is the more summarized version of it. So if you guys aren't receiving the in-depth newsletter every month, send me your email. I'll get you hooked up with that. But anyways, we're going to jump straight into it. Again, try to keep it short and not so boring. But so first things first with inventory, we did see inventory increase about 8% this month. In January, we had about 9,500 homes for sale. This is active for sale. Not under contract or anything. And then in February, we had 10,300, so 8% increase. This is for a couple reasons. So one, going into spring, inventory does tend to increase because more people decide to move. And usually these do get absorbed by the increase of buyers that come onto the market. But in this case, the last couple months, we have seen sales slow down, usually about 3,000 homes sell a month. In January, we saw a huge dip in sales, about 2,200 homes sold. And in February, 2,700 homes sold. Average days on market has been increasing too going into spring, which is unusual. Usually days on market decreases. We went from 65 days in December to 69 days in January, and in February, 73 days on market. So if we don't see that kind of come down a little bit in the upcoming months, we're going to have a slower spring selling season. December, 3 months of inventory. This basically means if every home, if there were no more homes listed, how long would it take for every home to sell? So 3 months of inventory in December, 4.3 months in January, and 3.7 months in February. And as far as what this is doing to prices, we did see prices dip down in January, and they've kind of crept back up just a hair. So median prices are up 1.2% year over year. This is going back all the way to last February. The average sales price is up 3.2% year over year. Average sales price is $636,000. And again, so we did see prices come down from $502,000 down to $500,000, and they've crept back up just a hair to $500,000. So we're seeing prices increase steadily, but this could all change depending on how many homes are selling. So we'll just have to see. We'll have to watch that pretty carefully. As far as the list to sold ratio goes, what this means is 100% is the asking price. Above and below that is what people are receiving in offers. List to sold ratio in December was 96.1%, January 96.2%, February 96.4%. It is normal to see that creep up as we head into the spring and summer season. As far as what rates are doing, they came down and then they've been creeping back up steadily, but they've, for the most part, remained pretty flat. So these rates were pulled by my lender, going off of a $400,000 purchase price. Pulled 3/15/2025 at 10 a.m. I have to throw that disclaimer in there again because I'm not a lender, right? These are pulled by my lender. If you're going conventional, 5% down, 780 score, your rate's going to be 6.875. Again, these have changed. This is just to kind of show you what rates are doing on average, right? Jumbo conventional going off a $1.2 million purchase price, 20% down, 780 score, 6.75 rate, which usually it's pretty uncommon for the jumbo loan rate to be lower than the conventional loan rate, but nonetheless, that's what's happening. For FHA loans, 3.5% down, 660 score, your rate's going to be 6.25, which is common. Usually FHA rates are lower than conventional rates. The downside being you're always going to pay PMI regardless of if you have a 20% in equity or not. So the reason why rates are doing what they're doing is just because there's been a lot of volatility. The talks about, tariff negotiations with the U.S., Canada, Mexico, and other countries, as well as money being taken out of the stock market, being put into the bond market, helping rates come down. There's just been a lot of talks. And then in addition to that, CPI did come in lower than expected. So CPI inflation is down 2% month over month. And reports are showing that consumers are expecting inflation to rise. This is again because of tariff negotiations going on. We're expecting prices to increase, but we're just going to have to wait for more data to come out to see what's actually happening. And then, happens every year when they decide to, raise the debt ceiling again. Negotiations are causing government shutdown fears, which is again causing volatility. But yeah, again, my opinion is we're going to see inflation kind of teeter-totter, go up or down just a little bit until bigger news happens. And until bigger news does happen, we're not going to see a big fluctuation in rates. I mean, right now they're at the lowest point they've been since last year, but they're still almost 7%, right? We're still at a 6.8% rate. And I think that's kind of where we're going to be until we see either inflation increase or inflation decrease. But we're just going to have to see what happens. I do think prices are going to stay relatively flat. I don't think we're going to see any big jumps or valleys in prices. I think, we may see once we hit the end of the year, we may see prices have gone up 1%, 2%, or down 1 or 2%, but I don't think we're going to see a big move in either direction. Same thing with interest rates. I don't think we're going to see a big move in interest rates unless we get some crazy economic data. But again, we're just going to have to see what happens. If you guys are a buyer, I recommend really taking a hard look right now. If the spring selling season is slow, it may be a little less competitive for buyers, especially if we have an increase in inventory. But if we're starting to see prices increase rapidly in the spring, you're probably going to want to wait until closer to the end of the year. And as far as sellers go, now's a pretty good time to list. Now's a pretty good time to list if you're really trying to maximize your money. And if you're listing a home in particular, you may want to wait another month or two, up until like July or August is the window you have. But yeah, now's a good time, a decent time to sell. It's going to get better as we go on a month or two. And if you're a buyer, really start looking now. Otherwise, we're going to want to watch the market a little more closely until the end of the year. But yeah, if you guys have any questions, feel free to reach out. I appreciate your time. See ya.